Hi, my name is Subhan. I'm a day trader. In today's video, I will be talking about why 90% of traders fail. So without further ado, let's get started. Uh, I am a day trader, as I've said. I primarily trade the Forex markets, but not limited to them. I began trading Forex about 2 years ago when I was 17 and became profitable in June of 2020. When I first started trading, I, like majority of traders, was desperate to make money in the markets and very quickly realized I would lose a lot of money in a very short amount of time if I continued gambling. Yes, gambling, because I essentially realized without a profitable, back-tested trading system, you are gambling. In this video, I will be covering my mistakes and experiences as a trader that led me to profitability. Disclaimer, this is not financial advice. I speak for myself and only me. If you follow and you screw up, that's on you, probably because you fucked up, but let's go on. Before we get into why traders lose money, let's start off with what makes a trader profitable. Most importantly, in my opinion, is psychology. It is the most important aspect in a trading system. Due to it being responsible for your rational decision making, pretty self-explanatory. Secondly, is your risk management, because traders are risk managers and not gamblers. That's what makes us traders. Thirdly, a profitable strategy. There's more to a strategy than just things learned off of YouTube, hence why it's called a system. Finally, backtesting your system and journaling your trades. Think about it. Do the banks just enter random trades and go on? No, they very extensively plan and then they enter a trade and they journal them. So why don't you? So let's get more into psychology now. In trading psychology, there's something called FOMO. It's short for fear of missing out. As the name implies, it is the fear of missing a trading opportunity. Hence, why you don't follow your plan or strategy, which leads to losing trades. A few characteristics of FOMO include, but are not limited to, greed, fear, and anxiety. I'm sure you've all experienced them. I have. I know for a fact I have. To be successful in the markets, you need to build a very detailed and thorough plan and at all times stick to it. Elsewise, you're asking for disaster and essentially gambling, which is what we're not here to do. Meditation works well for me to eliminate FOMO, particularly Wim Hof method. I'll have a link in the bottom if you want to read more about Wim Hof. Most importantly, sticking to my plan because I'm not over leveraging and I know the exact outcome at the end of the day, which will result in not being stressed out and acting out of anxiety. Now, let's get into risk management. It's extremely important to not over leverage because if you do, you most likely the trade will go against you. I'm sure you've all been there and know exactly what I'm talking about. And then you will be stressed out and worried for it to reverse, which, let's be honest here, is very rare and it's not going to happen, and you'll end up blowing the account. The correct way to calculate the risk for a trade is 2% of your account. So let's just say it's $1,000 account. 2% of that would be $20. Divide by the amount of your stop loss pips. Divide by 10, that equals your lot size. Do not move your stop loss. Part of being a trader is being able to accept losses and not gambling. And always stick to your plan. Never risk more on a trade than you're comfortable losing. So don't enter that trade unless you're okay with losing that money. Hence why I use good risk management. Now that we've talked about prep work, let's talk into actual trading. 1 second. It's extremely important that you stick to one strategy and perfect it. Otherwise, your trading system is too diluted and hence won't be profitable. A very common mistake for beginner traders, they see a YouTube price action video. On YouTube, price action is better than indicator-based trading. While that is true, you have to keep in mind that it takes years of experience to get there. It's not a bad idea to take a conservative route and start with indicators because they are profitable to a certain extent. Your goal as a trader at all times is to be profitable. And your number one goal should be to achieve that. After achieving so, then you can venture off to backtesting other methods to be more profitable. Before I go farther, I also want to add that you want to backtest your strategy on a demo paper account first. Many people, and I was extremely guilty of this myself personally, they see, that support and resistance works or whatever, or trend lines work, whatever it is that you use. I'm just paraphrasing here. And they go on a live account and they literally start trading. You're asking for disaster and you are going to fail and you're really hitting money and liquidity into the markets. That's exactly what you're doing. Your loss is literally my win at that point. And the reason being is there's multiple parts, as I've said, to a system. Yes, support and resistance works. Yes, trend lines work, but in conjunction with other confluences. That's what many people don't understand. And the fact that the system is not back tested, so you don't know its outcome. And for that reason, it's not a trading system that's profitable. So let's go back into the script. So as I've said, after you've achieved profitability, you can go into venturing off into other ideas, such as price action for your trading system. There are multiple parts to strategy. It's not just one aspect of trading, as I've said previously, that works, that you can rely on, that's wrong. For example, many traders, including myself, as I said previously, use support and resistance. There's many important factors. These are a few confluences that I'll name that I use personally myself, such as fundamentals, market structure, trendline, and Fibonacci retracements. Hence why it is important to build a strategy in which three major confluences are present in which, in theory, will equal to high probability. As previously said, it is very important to keep in mind just because you have a high probability strategy doesn't mean you will be successful. Let's say you over leverage on a trading system and it hits stop loss, you end up blowing the account. Pretty self-explanatory. Hence why you need to build a system. A trading system is not just your strategy and consists of the factors mentioned today and possibly more. Now let's talk about finally journaling and backtesting. Ever heard the saying practice makes perfect? That's very true in trading. It's extremely important before you trade on a live capital. Your trading system is very extensively backtested. On a demo account, the same way you trade live. That includes backtesting your strategy and trading, whatever you use for your charts, and see its a win and lose ratio. So you know if a strategy is even profitable. Ideally speaking, you want to have at least a risk reward of 1 to 2. Meaning if you lose 50% of the time and you use 2% risk, you still be profitable. With that being said, let's talk about journaling. I've seen many traders on Instagram and whatnot calling themselves institutional traders. I don't know what that means, that's supposed to mean, but many of these individuals fail to journal their trades, including myself at one point. And majority of these people are from MLM schemes. You should stay away from them. That's a topic for a different day. Financial institutions just don't enter random trades. They're very carefully planned and journal every step of the way. There's a reason it's so important to journal your trades. Because you see the flaws in your system, and then you build goals to build upon your system to perfect those flaws, which results in profitability. And it doesn't stop there. You always have to backtest consistently. I backtest almost 8 to 12 hours a week. Even I should be doing it even more to just as I said, practice makes perfect, In trading, there's no such thing as perfect. You always just have to keep moving forward, and always just have to keep practicing. So that's it, guys, for today. Let me know if you have any questions or concerns, and I'll be sure to address them.